G'day folks, welcome back to Pete's Investing. It's March 27, 2024. This is the nat gas, iron ore, copper and crude oil update. First off to the weekly, monthly and daily trend table. You can see there nat gas on the monthly is still very short, weekly neutral, and daily just sticking its nose up and making a long positioning. US crude long all the way across, high grade copper likewise, except at the daily it's still short, and iron ore across the board short positioning. For nat gas, starting off, we've got a bearish outlook on the CCI 1500 down here. That's our major trend indicator. The CCI 150 is also a trend indicator and a divergence indicator. You can see there on the daily it is just sticking its nose above as a bullish movement, but still very bearish on the monthly and weekly, so I wouldn't be going long at this stage. It's also a divergence indicator because you've got here a lower highs on the CCI versus higher highs on the price, and the price actually fell off, hit our target there. That was our initial minimum target range, but you can see there it fell right down past 100% level. Now more recently on the daily, it's hard to see, but we've got a lower lows on the price there versus higher lows on the CCI, and it bounced up from there, and then actually I haven't drawn a target range on that one, but if you were to do that, that would be the 23 to the 38% level, so that would have been from that point to that would have been a minimum target range, and you see that it hit that area and then it bounced back down again. But I always pick the closest range. You can trade these depending on how slow what time frame and what chart you're looking at, but I use them as a potential area to get out of if you're going short in this case. Then you start seeing a divergence. That's what gives you another signal to get out, as well as some of these trend indicators. So that was the more recent bullish divergence on that. There is no current bearish or bullish movement on the daily. On the 1 hour chart, zooming out first off, we look at this stochastic market forecast down here. You can see it's been in the oversold territory for some time, making a bit of a break above the plus 10 area, and still sort of very low in there, so very oversold at the moment. And if I zoom in, what we look for is any trends. You can see that I drew these trend lines, these diagonal trend lines. So it was bouncing in this upward trend for a while, then it started breaking down below that bottom trend line, and now it's in this descending trend channel as we speak. So it's currently hugging that upper diagonal trend line. Also, we did have a bullish divergence back here. This is independent from the daily. This is on the 1 hour chart, and it actually bounced up, hit our little target, but actually went much higher than that. Again, these divergence could mean a very minimal retrace to that 23-38% level, or that could be a total reversal, so you can't really tell. Sometimes these smaller divergence plays are a lot more aggressive than the bigger ones. And in terms of current divergence, we have you can see there that CCI is moving in line with the price, higher lows there, and that's pretty much almost a double top. And that's moving in line with the price as well. So no divergence to talk of at the moment on that one. You will notice as well the CCI 1500 is making a very slight bullish movement. It's turned green, and that's a slight improvement, and the CCI is broken above that moving average as well on that one. Next, we go to US crude. And as I said, for US crude, we're looking at long on the monthly and weekly, and also on the daily. So first off, on the daily chart here, we've got the CCI 1500. It's very bullish there. Nice movement. The CCI 150 is also bullish above its moving average band, and the price has actually reached this minor resistance at 83.12 and currently hugging this diagonal trend line. On the hourly, again zooming out, it's in the overbought territory, and you can see there when it does hit that overbought territory, it eventually falls back. Could stay up there for a while. Doesn't necessarily mean it's going to pull back straight away. You can see there it actually gave you a couple of warnings. It was getting a bit oversold down during that period. Then it finally started bouncing. And currently we're in the overbought territory, as I said, and we may see some movement to the downside. We did have a recent bearish divergence there on the CCI 150. versus higher highs on the price, came back, hit our target, and currently we're no divergence to talk of at the moment. And again, the CCI 1500 is broken below its moving averages, and that's showing a potential weakness. So even though the trends are showing bullish movement on the daily, the hourly are showing bearish movement. So just be careful about going long. Next, we look at high-grade copper. And for high-grade copper, what we do have is long on the monthly and weekly and short on the daily chart. So again, looking at the daily chart here, we've got the CCI 1500, very strongly bullish, was back there, but it actually broke down, and now you can see there the CCI 150 is broken below its moving average band, hence bearish on the daily. And it actually hit this resistance up here at 41,711 and currently resting on this support at 39,979. On the hourly chart, first looking at the stochastic market forecast, it's in the overbought and then pulling back from the overbought. You can see there after that resistance, the price has actually pulled back. And zooming in, you can see we had a bearish divergence versus higher highs on the price, came back, hit our target. And more closely, if you look at that, we've got a bullish movement on the CCI versus bearish on the price chart. It's actually come up and hit our minimum target. At the moment, the CCI 1500 is still declining below its moving average, so bearish at the moment, so be careful about not taking any long trades until we see this start breaking more bullish movement in line with the daily as well. And lastly, let's look at iron ore. Now, iron ore is short across the board. So you can see there on the daily, the CCI 1500 still bearish movement. The CCI 150 broke into the moving average band initially, and it actually broke out overnight. And you can see it's currently resting or approaching this minor support at 749. We did have a bearish divergence on the daily. These can happen on all time frames versus higher highs on the price. Came and hit our target. In this case, it's coming and approaching almost 100% level retrace. On the hour chart, we were in the overbought territory up here, and it's now approaching towards the oversold territory on our market forecast indicator. And zooming in, we do have a bullish divergence here on the CCI 150 versus lower lows on the price. Bounced up, hit our target. We had a couple of divergences back there, and now it's making a retrace back to the downside after hitting the target. So again, predominantly bearish trade should be taken only, no long trades, as you can see on the hourly as well. To support us more, go to the Patreon page for Pete's Investing, where we also do weekly scans of blue chip shares that are trending along on a longer and medium term timeframes. Feel free to support us there, and we'll see you in a future video.